What's up everyone, it's Kadi with Money Investing. So in this video, I really wanted to go over the potential opportunities with what's going on with Silicon Valley Bank. And first of all, I want to be very clear. I do feel for these startups and the venture-backed firms and the people who are not able to make payroll and people who are not on the receiving end of it, not able to receive their payroll. I do really believe that this is a very, very unfortunate event. And with what's going on with this entire mess is creating a lot of panic and a lot of anxiety and a lot of fear in the entire system. So I do feel for that. And again, I don't want to come across as just looking at the opportunity side of things, but I really still want to present where the opportunity might be or what could potentially take place moving forward. But I still want to be very clear that yes, I do feel, for what's going on with Silicon Valley Bank, and especially with what's going on with the customers of those banks and the people, employees working at those companies, those startup firms, and their families as well. So, but in this video, I want to focus on two questions and two questions only. I'm going to help you answer these two questions, where the opportunities are really going to come from. And the first one is, where does the remaining liquidity go? And what happens to tech startups and venture-backed firms? Okay, so remaining liquidity, what I mean by that is, depending on whether the government steps in or not on Sunday or Monday, actually 1 p.m., the Treasury Secretary Janet Yellen will have a press conference with California government, and they'll come up with a plan on what to actually do next. But the main question definitely has a much deeper meaning, because, if this entire saga or this debacle leads to a lot of less trust, in the banking system, where does the remaining liquidity go, right? Where does the existing liquidity actually go, right? So all these companies that actually had money in Silicon Valley Bank, whatever's left over of that, because FDIC is not going to insure everything, right? They have a cap at 250,000. And even if the government starts to step in, there's a bailout, and it's going to be more of a timing issue, because obviously not everyone's going to be made whole immediately. It's going to take time as Silicon Valley Bank assets are being sold, as their equity is being accounted for, and as this process takes on over the next few years, they will be paid on a prorated basis. So you can kind of see that on their website, that what happens when a bank fails. In the unlikely event of bank failure, the FDIC responds in two capacities. First, as the insurer of the bank's deposits, the FDIC pays insurance to depositors up to the insurance limit. Historically, the FDIC pays insurance within a few days after the bank closing, usually the next business day, either by providing each depositor with a new account at another insured bank in the amount equal to the insured balance of their account at the failed bank, or issuing a check to each depositor for the insured balance of their account at the failed bank. In some cases, for example, deposits that exceed $250,000 are linked to trust documents or deposits established by a third-party broker. The FDIC may need additional time to determine the amount of deposits insurance coverage and may request supplemental information. Second, as the receiver of the failed bank, FDIC assumes the task of collecting the assets of the failed bank. So as I mentioned, selling Silicon Valley Bank assets and settling its debts, including claims for deposits in excess of the insured limit. If a depositor has uninsured funds above the insured limit, they may recover some portion of that uninsured funds from the proceeds from the sale of the failed bank assets. However, it can take several years to sell off the assets of a failed bank. And as assets are sold, depositors who had uninsured funds usually received periodic payments. So as FDIC is pretty much going through this whole process of selling off, Silicon Valley Bank's assets, and if that actually gets down to it, then of course the customers will still receive the payments, but they will receive them periodically and over a span of few years. So it's more of a timing issue. So the real question becomes, where does the remaining liquidity go? That's number one. Right? Because wherever this liquidity goes is where the opportunity will be, right? Because we need to kind of be one step ahead, looking at where the money will eventually end up, and where this panic will take us, right? If existing people who have money in banks, regional banks, whatever it is, if they start taking money out because they're not trusting the banking system or the financial system in the US, where does that liquidity go, right? That's the question. That's the first question, where the opportunity will be. And the second question is, what happens to tech startups and venture-backed firms, right? What will happen if they're not able to make payroll, if they're not able to survive, so to speak? Because, Silicon Valley Bank had financed so many venture-backed companies. Like, there were over 130,000 venture-backed companies according to PitchBook. And Silicon Valley Bank has 50% of US VC venture-backed startups as customers, right? So 65,000 startups that used Silicon Valley Bank. Another report, Gary Tan, president and chief executive of Y Combinator, a startup accelerator in Silicon Valley, said many of its roughly 3,000 active companies had a relationship with Silicon Valley Bank. And YC surveyed those companies Friday morning, and by Friday afternoon, nearly 400 had said they had exposure, and over 100 said they were worried they couldn't make payroll over the next 30 days without a quick resolution for the bank. So this is the situation we're in, right? Liquidity and what happens to the companies that are customers of Silicon Valley Bank. And some of the companies you can once again see, this is a little bit more of a longer list. You can see Circle, Roku, BlockFi, Roblox, Ginkgo, iRhythm, Rocket Labs, Sangamo Therapeutics, Lending Club, and Pioneer. And these are some of the companies that have respective money or deposits in Silicon Valley Bank. So here's where I believe the opportunity could be, right? Where does the remaining liquidity go? It could kind of consolidate into big four, right? Because those are considered as too big to fail. We're talking JP Morgan, we're talking Goldman, we're talking Bank of America. Some of the biggest banks in the US, right, could consolidate towards those big four. But the problem is they were never in the business of backing venture-backed firms or in the tech startup sort of business because they were inherently more risky to begin with. And that's why Silicon Valley Bank took over that business. They were like, okay, Big Four doesn't want to do it, we'll do it. And as a result, they were kind of like the go-to bank for a lot of startups and tech companies. The second, and I think where the liquidity might end up, is US Treasuries, right? US Treasuries considered to be a no-brainer, very safe investment in my personal opinion, considering that it's a risk-free rate, right? You're backed by the US government, and whatever you invest, you're pretty much guaranteed to get back for the most part, right? The principal back and the coupon, unless the U.S. defaults on its obligation, right? Which has never happened. Once happened, were more technical basis back in the 1970s, but that was more of a delayed payment as opposed to anything else. And then we got certificate of deposits, right? CDs at banks, and we got money market funds. So these are four areas where I personally do think or believe where the liquidity could end up. Again, feel free to chime in down below if you have any comments, any concerns, any analysis that you'd like to add. In other words, where the liquidity might go. And when it's specifically talking about U.S. Treasuries, we've already mentioned how I am a little bit long on the TLT TMF ETFs, on a more bond price ETFs, because the yields have been going higher and they're going to start to become more and more attractive. And now even more so considering what's going on with Silicon Valley Bank. And right now we're starting to see if that liquidity shift happens away from regional banks and regular banks over to US Treasuries, because they want to, make sure that their deposits are safe, then that will definitely drive up demand, pushing prices higher, yields lower. And as a result, that's where I do think the opportunity could also be if this continues to happen over the course of the next few weeks. What happens to tech startups and venture-backed firms? Well, if they actually go through a process of not being able to meet up with their working capital and payroll and management and investments, their debt obligations, they're not able to do that, then obviously there is going to be an element of potentially going bankrupt. But if they are with a very successful idea, there is going to be potentially an increased interest in acquisitions, right? Mergers and acquisitions. And there is a possibility that FANG stocks of the large cap tech companies that are flooded with cash might swoop in to get these deals, which you're pretty much getting these companies pennies on the dollar, considering in which conditions these startups might end up being with the fall of Silicon Valley Bank. So, FANG stocks, we're talking Meta, Apple, Amazon, Netflix, Google, Microsoft, Tesla, Nvidia, AMD. Like, these are companies that could start to step in and look at these startup companies, look at these venture-backed companies, whether it's a technology, whether it's a process, whether it's a patent, they could look at these and they could put up an offer for potential acquisitions, or of course, it could lead to bankruptcies, or it could lead to mergers where 2-3 startups kind of combine together, combine their resources and consolidate a little bit. So that's where I kind of like thinking out loud. Those are the type of opportunities that I'm thinking of, in my personal opinion. Again, U.S. Treasuries definitely do represent big opportunities for customers of Silicon Valley Bank, and of course, we've also got some of the other potential opportunities here with FANG stocks and M&As that could drive a solution to what we're seeing right now. But definitely very, very unfortunate event with what's going on with the Silicon Valley Bank and the customers of these companies as well. So let me know your comments down in the comment section below. What do you think? What is your analysis? As always, I'll kind of update you guys as I'm getting more information, as I'm getting more updates. I'll update everybody on Discord and more videos. And I will be doing a separate video going over how to make sure that your deposits are safe. So I will be doing a separate video going over, the fine print of FDIC, what are the regulations, what are the rules, and I will be going over how to make sure that your deposits are safe with the banks that you are banking at. I will be doing a video on that as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. As always, happy investing, and I'll see you all in the next video.